Picture a colossal concrete dam holding back a dark, heavy ocean, spiderwebbing with deep cracks under the compounding pressure. This visualization maps out time. If you spent $1 every second, it would take over 1,000,000 years to spend $1 trillion. Multiply that million-year timeline by 35. That is the actual scale of America's current national debt, growing larger every day. To see how we got here, look at the basic math. National debt is the accumulated difference between taxes collected and what the government actually spends. Historically, that borrowing spiked during massive global mobilizations like the World Wars. Recently, those massive expenses have come from different emergencies: economic recessions, widespread infrastructure needs, and sudden pandemic stimulus checks demanded huge cash injections. In 1980, the entire national balance sat under $1 trillion. Today, it has exploded past $35 trillion. For decades, America has normalized operating its entire economy on a continuously expanding, historically unprecedented national credit card. The immediate danger of a massive balance is the cost of carrying it month to month. This chart compares federal expenses. Because interest rates have gone up, the annual cost of paying interest on the debt is rapidly overtaking the budgets of major government programs. That is real money vanishing from the physical world. Dollars that could repair bridges, expand healthcare, or fund schools are instead eaten up completely by interest payments. This diagram illustrates the trap. To pay off the interest on old debt, the government is forced to borrow even more money. Borrow, spend, pay interest, borrow more, repeat. The debt now functions as a self-feeding trap, completely consuming the resources intended for the country's future growth. This debt isn't owed to a single bank or a lone billionaire. It is a highly distributed network of millions of different creditors. A huge portion of that money is owed to everyday American citizens. They hold the debt through retirement accounts, pension funds, and personal investments like savings bonds. The second major pillar holding the debt is the central banking system, the Federal Reserve. Then there are foreign nations. Japan, China, and the United Kingdom are the three largest groups of international creditors. When these entities buy U.S. Treasury bonds, they are directly injecting cash into the U.S. government. This complex web ties domestic savings to foreign wealth, meaning a default would destroy the assets of American citizens and their closest geopolitical allies simultaneously. Global superpowers rarely intend to pay their national debt down to zero. This schematic shows the mechanics of rolling over debt. As old bonds reach maturity, the government issues new debt to cover them, keeping the system moving indefinitely. The world permits this maneuver because the US dollar is the global reserve currency. This status makes America the safest perceived borrower on Earth. Economic survival relies entirely on this geopolitical privilege and the world's unbroken demand for the currency, rather than traditional fiscal responsibility. A system built entirely on rolling over debt is reliant on the psychological trust of global investors. If that trust cracks, the mathematical trigger is immediate. Investors stop buying bonds, causing borrowing costs and interest rates to spike out of control. This collapse in confidence triggers cascading secondary effects, surging inflation, and stalled economic growth. This outcome is a matter of record. Greece serves as a modern precedent of a nation overwhelmed by a sovereign debt crisis. In South America, Argentina faced similar widespread economic chaos while battling international creditors. And in Venezuela, debt resulted in a complete currency collapse and domestic despair. While America controls the world's most powerful currency, financial markets are ruthless once confidence evaporates. The $35 trillion debt is a massive pressure cooker. The global economy won't collapse because the math is impossible. It will collapse the exact moment the world stops believing the illusion that America can pay.